Welcome to Investors Insights. Our topic today, dividends and liquidity matter. We chose that topic for various reasons, and we're going to explain that in the blog today. Thoroughly enjoyed my meeting with my distinguished colleagues, Bobby Norman and Ty Miller. Guys, great research this morning and excited and looking forward to sharing this with our viewers. So let's start off, Bobby. I think we've had clients asking about dividends. You want to elaborate on that?
Yeah, so I had a conversation with a client last week around the topic of dividends and how we look at income as a key aspect of total return in our investment strategies. More importantly, kind of how dividends have helped total return offset higher inflation. So in fact, dividends accounted for nearly 34% of total return of the S&P 500 index from 1940 to 2023. Again, 34% of total return over the past 83 years have come from dividends. And so obviously many investors are aware of the importance of dividends over time. That said, we also expect our investors are also aware of the impact of inflation over time. And so looking at this chart, we can show the extent to which dividend payments have outpaced inflation. And the time frame we chose was the 45-year period from 1979 to 2023. And the dividends per share, as you can see in the chart, paid by the companies that comprised the S&P 500 increased at a staggering pace when compared to inflation. So over the 45-year period covered in this chart, the compound growth rate of dividends per share is 5.78% versus inflation growth of 3.13%, as you can see in that chart. So we show this chart to show that dividends have provided a powerful offset to inflation pressures over time, and is why we look at dividend payouts carefully when building our investment strategies. So dividends matter.
They definitely matter. And also when we're doing the financial blueprints, analyzing our clients' needs and cash flow, dividends help with that. So it's not only the growth of the portfolios, but also when we need to pay out income and those kind of things, dividends help tremendously. I really appreciate you doing that research, Bobby. Thanks. It answered a lot of questions for clients out there. And then, Ty, we've had clients asking about liquidity. Liquidity is a big topic as well. So why don't you elaborate on that?
Yeah, liquidity also matters. So in April, we had about $278 billion of a liquidity drain. Now, kind of what does that mean? Just think about it. In April, we're paying taxes. If you're paying taxes, the individual or corporation, that's less money to put in investments. That's less money to save because you're paying this, this payment. Same thing with any kind of ordinary bills you may have or debt. So all these things kind of lump in where if your money's being directed to pay off debt, pay taxes, whatever it may be, that's less money you have to save and to invest. And, that kind of affects the stock market because there's less money to be available there to buy equities or bonds or, whatever it may be. The good news is that's a one-time thing once a year. So I would, I think that we're kind of expecting a little bit of a reversal as we move on, where there's some more liquidity in the system, which would be a little more beneficial hypothetically for, the markets in general. And with that being said, I have this interesting chart here that shows how April tax payments kind of affect the stock market. And so, as you see here, we were in quintile 1 this time, or 2, where we had some higher tax payments this year. And typically in that when we're in those quintiles and we have higher tax payments, the market kind of performs worse at the beginning of April. And then after those payments are issued, then, the second half kind of rallies a little bit. And we saw that a little bit last week. I think April, for the most part, was down for the entire month. But last week, we did get a little bit of relief because people paid those taxes. And now they kind of know what levels they have and what extra income that they had to invest or to save. And so we kind of, followed the script here this year, which was nice to see. And then additionally, as we're approaching here the end of April, I would like to remind people about the saying, sell in May, go away. That saying, while it's very popular, sometimes doesn't hold a lot of water. As you see in this chart here, this is a breakdown of, sell in May, go away, kind of the performance, May through October. divides it up by presidential election year. So the first year of presidential cycle, midterm, pre-election year, and this year, of course, is an election year. The only time sell in May and go away kind of holds water is in a midterm year. So while it's a popular saying, don't take it too much to heart. I recommend, staying invested for the long haul and having a long-term perspective on things. And May through October is not all bad.
Great insight. People will say that to us in terms of, hey, I've always heard in May you should sell, and it doesn't work like that. So great chart that you shared there. And then also, Ty, I appreciate you bringing up the whole issue about taxes. No one likes to have to pay taxes, but I always say if you got to have a problem in life, why not make it a tax problem? Because that means there's money somewhere. We do coordinate with our clients' CPAs in relation to their financial blueprint this time of year. And going forward, we're always looking ahead that, yes, as Bobby talked about dividends and strategies, we coordinate that with the financial blueprint. But simultaneously, we're in constant contact with our clients' CPAs to just kind of gauge how their tax experience is going to be going forward and what strategies can be implemented to help keep those taxes down. So we always enjoy having those debates and discussions and trying to tie that to the financial blueprint and portfolio strategies that we use for our clients. Folks, we want you to have a phenomenal week. Cannot believe we're getting ready to end the month of April, heading into May. Please keep up with us as we want to keep up with you through our social media, Facebook, Twitter, LinkedIn, YouTube, and our podcast. So we're going to continue to expand that because of all the information and feedback you're giving us as to how you're utilizing that information, as well as sharing it with others. We hope you have a great week and know every day here at Five Plan Partners, we're striving to make our clients' lives better, richer, fuller. Take care.